Good morning. It's Jeffrey Christian of CPM Group. It's not quite 10:30 here in New York on Friday, the 27th of September. I have quite a few things I want to talk about today. I want to talk about the dollar, update you on where the trade-weighted dollar is, the currency exchange rate. Then talk about silver manipulation claims as nonsense. People have asked us, why don't we address those issues? And I'll explain why we don't address those issues now a little bit later. Do a little brief update on the gold and silver markets. Gold is at record prices, but it's a little bit off today, but it did go above $2,700 earlier this week. As I'm speaking, the December contract is $2,685, and the December silver contract is $32.32. Having gotten over $33 in the last couple of days. And then I have a little political tidbit that I'll throw out at the end. Before I get into that, I want to mention, back a couple of weeks ago, on September 5th, we structured some hedging strategies and some investment strategies for clients. And I mentioned them in a video, I believe, on the 6th of September. One of them was a butterfly call spread with the December expiry, if I recall correctly. And it was meant to profit handsomely if the gold market was volatile leading up to and into and in the immediate aftermath of the U.S. election in early November. The butterfly call that we structured was a December contract, so it expired in the end of November. We structured it and priced it on the 5th of September, and it cost $11.10 to put in place. Since that time, the gold price has risen 6%. The gold price was $2,519 on the 5th of September. As I said, it was $2,670 at the settlement yesterday. That $2,519.70 was the settlement price on September 5th. We had priced the butterfly a little bit earlier in the day. And the settlement price yesterday was $2,670.40, which was a 6% gain in the gold price. The cost of putting that butterfly in place on September 5th was $11.10. Yesterday, the price was around $22. So it was up 100% in 2 weeks. That's the power of hedged options and compound option strategies. Just thought it was pretty cool. And I thought I should update you on what it was. Now, here's the dollar. And you keep hearing that the dollar is plunging and that no one wants the dollar and that governments are dumping the dollar. But that's nonsense. It's just not true. The dollar is down from where it was a few months ago. It's almost back to where it was on the 2nd of January in 2024, beginning of this year. Yesterday, or the 20th of September, we looked at the trade-weighted dollar, the U.S. Fed trade-weighted dollar, Fed calculated trade-weighted dollar, and it was up 1.7% last Friday from where it had been in January. Fell a little bit more earlier in the week, and it was basically back to where it was in the start of the year. But if you look at it, it was up 2.9% from where it had been a year ago, September 20th of 2023. It was up 3.6% from its low last year, which was in July of 2023. And it was up 10.9% from its June 1st, 2021 low, as you can see on this chart here. Dollar got very high during the COVID lockdown. It came off after that, and it's risen back to newer higher highs since that time, and it's come back off. The dollar is not exactly collapsing. But let's get to the meat of this presentation. People ask, why doesn't CPM Group talk about the silver conspiracies and manipulation? And there are two main reasons for that. The one is it's utter nonsense. Anyone who speaks or writes about this or believes it does not know anything about how commodities, including silver, but not only silver and not only silver and gold, commodities across the entire spectrum trade. They either don't know what they're talking about or they're consciously misleading people that they're talking to and writing about. It's a waste of time. It's a distraction for what really matters if you want to intelligently invest in silver. And its origins are in the psychological issues within the conspiracy believers. The origins of these kinds of conspiracies are not in the real tangible world or market. You don't need an economist or a market analyst to understand these. You need a psychologist. The other reason why we don't talk about it these days is we've already wasted so much time addressing these moronic arguments. And I'll show you some stuff in a bit, but let me run through a few. This is some data that we did back in February, back in 2021, 2022. And we took a slice of the trading on the COMEX silver futures. And we looked at the volumes, and we looked at the number of volumes within a standard trading deviation. You know, the first standard deviation, second standard deviation, and the third. And then we said, what percentage of those were outsized price moves? Well, first off, you can see that 91% of the trades were in the first standard deviation, and 3.9 were in the third standard deviation. And we said, if you look at the outside moves in the prices, third standard deviation or larger, there were 97 times when you had that large move and it was on the upside, the price rose. There were 95 times when there was a big move down. And there were 11 times when the volumes were very large. We're measuring the volumes, not the price moves here, but we're measuring the volumes behind the price. There were 11 times when you had this outsized volume and the price didn't really do anything. So 50-50, well, 47.8 to 46.8% up and down. So in other words, you see these large surges in volume. It's not one entity. It's hundreds and sometimes thousands of traders, mostly computers these days, saying, oh, I'm looking at a price chart and the price has crossed this line, so I'm going to buy or I'm going to sell. And half the time they're buying and half the time they're selling, right? So you start saying, okay, where's the evidence that a silver prices only get slammed down on high volumes and it's one volume, one person? We broke it down into more granular, third, fourth, fifth, and sixth or higher deviations. And it was the same sort of thing, right? It's just not there. Now, here's another thing that's very interesting. The concentration of silver short positions, and we compare them to other commodities. And what's the short position concentration, short and long, in silver in the hands of a few bullion trading banks? It's not out of line with the concentration of volumes in other and positions, so open interest, in other commodities markets. This reflects the specialization in banking. You know, like there's 3 or 4 banks that have the vast majority, like 80% of mortgages. There are banks that will process the mortgages, and then they sell them to banks that hold them. And if you look at the banking industry, it has become incredibly specialized, and banks pass off positions to each other, and they specialize on one end. Looking at commodities, the CFTC monitors and collects data on 60 futures markets. Of those 60 futures markets, silver ranked 30th in terms of the percentage of open interest held by the 4 largest gross short position holders. And it was 25th in terms of the percentage of open interest held by the 4th largest net position holders. In other words, silver does not have an outsized concentration of trading in the hands of a few large banks. And you can look at this. I made the red line bold. The red line is short concentration compared to gold of silver. And then the others, gold is gold and copper is copper colored, and platinum and palladium are those silvery type colors. And you can see that the concentration of positions in the hands of the top 4 trading entities for silver basically are less than or smaller than the concentrations in other markets most of the time. These are the other precious metals markets and copper. Silver does not have an unduly large concentration of positions. I also looked at it compared to natural gas, oats, and soy meal. Again, silver is the red. And you can see, again, it's right there in the pack in terms of natural gas and soybean meals. Natural gas and soybean meals. And it's less than the concentration in oats. Oats is a smaller market. So you're not seeing it there. Now, this is data from 2005 to 2012. I didn't update it for this because nothing has changed. Okay? There's no undue concentration of silver shorts compared to other commodity markets. In fact, silver kind of lags it. And that makes sense because silver's got more entities interested in it than, say, oats or soy meal. It's not natural gas. And those large periods of trades, 5-minute intervals where the trading surges, more often than not, it reflects a surge in prices, a spike in prices, briefly, rather than someone spamming the market. So we don't talk about this stuff because it's nonsense. There's nothing to support it. Now, we also don't talk about it because we've talked about it ad nauseum over the years. Here are 4 links to long presentations we've made over the years. One in 2022 at the Silver Symposium in 2022. It was a little over an hour long. Our 2021 Silver Facts and Fantasy webinar, that was a 2-hour presentation. The Silver Facts and Fantasies in 2022 is an hour and a half. And the Great Silver Debate, where we were challenged by GATA to refute their evidence that the gold market and silver markets were manipulated and there was a grand conspiracy, and we tore their arguments apart. That was back in 2012. We also did a radio interview debate with them in, I think it was May of 2010. They asked the questions. Financial Sense, Jim Puplava was the moderator. He worked off of their arguments, their questions, and we just disputed everything that was just total nonsense. But you don't have to listen to these things for 2 hours. Since 2021, we've talked about this in our videos, and here are links to 3 of them, and then there's one link here which I thought was to an earlier one, but no, these are all 2021, 22, 23, 24. And you can find these on YouTube, and you can study it, and then you don't have to bother us. And then these are post-2022 YouTube videos, continued. One of them is actually from 2008. Conspiracy theories are a distraction, right? And that was in 2008. We gave a speech to the IPMI, and it was so good that Kitco asked, no one recorded it, Kitco asked us to go through it again, and they posted it in September of 2008. And I'll tell you about that in a second. And then February 2021, October 2021. There's plenty of stuff out there. I'm so sick and tired of having to lower the intellectual content of our videos to talk about things that we ought not to be talking about. I'd much rather talk about where we're going with the outlook for gold and silver and what's really going on with gold and silver. I really don't like sitting here constantly refuting the nonsense that poor retail investors are subjected to. The dollar's going to collapse and BRICS is going to a gold-backed currency. All wrong. And dredging up these old manipulation and conspiracy theories that go back thousands of years. It's just nonsense. On our website, we have a place where we have some of these things posted, and I think that we're planning to post those links that I just gave you there. It's called The Counter-Arguments to Silver Conspiracy Theories. And there's a PowerPoint that we did in 2008. That's the PowerPoint that goes with that video. The video is terrible quality, by the way. There are two reports, one from 2004 and one from 2008, where the CFTC looked at the allegations of silver conspiracies and said, A, there's no evidence to support these conspiracies, and B, there's a ton of evidence to say these conspiracies don't hold water. They refuted it. And then we posted Ted Butler's letter to Dick Thornburgh from April 1989. If you really want to understand Ted Butler, God rest his soul, if you really want to understand Ted Butler's interest in promoting silver conspiracy theories, go to the CFTC to where they have filed complaints and caused people to be banned from trading futures and options. There's a very, very long record of Ted Butler. Now, when we did that 2008 video and Kitco posted it, Ted didn't like that I said stuff about him, and he sent me a note and he said, I never said that Drexel Burnham was behind the silver conspiracy, and I'm going to sue you for saying that. So we got a copy of the letter that he had sent to Dick Thornburgh, because Dick Thornburgh, who was the Attorney General at the time, he had sent the Justice Department had sent a copy to us saying, hey, is there anything here? So we have a copy of the letter in which Ted Butler says, yeah, if the CFTC doesn't prosecute me for what I was doing in the frozen and concentrated orange juice market, I will show the CFTC what Drexel, my company that I work for as a broker in Florida, is doing to the silver market. CFTC said, show us what you got. He showed them what he got. They investigated him. They fined them for 2 matched trades, which I won't bore you with the details as to what they were. And then they banned Ted from being involved in futures and options for the rest of his life. He needed a job, so he became a silver conspiracy person, initially blaming Drexel. And he mentions Drexel in this letter to Dick Thornburgh. And that was the last communication I ever had with Ted, not in 2008. But he mentions Drexel then. Drexel went bust in 1989. I think it was later in 1989. And so he started saying it was Merrill Lynch that was doing this master conspiracy to suppress silver prices. And when Merrill Lynch got out of the retail silver business in the mid-90s, it became J.P. Morgan. All of this stuff is online. You can teach yourself. I don't have to. Okay, next up, gold prices. Gold prices reached a record level this week. Our expectation has been that the price would rise sharply in the last 4 months of this year into next year, depending on how the economy develops and what happens with the U.S. elections and the post-election problems that we expect. We expect the gold price to rise even further. It could come off a little bit in the near term, in the next week or so. And we're keeping that butterfly in place. We're telling people, hang on to it. It's only up 100% right now, and it's late September. Hopefully you're back in school. We've got into early November to see how high that butterfly, how valuable that butterfly becomes, assuming that the prices remain volatile and go higher. Silver prices, They've broken above 31. They broke above 32. They broke up above 33 briefly earlier in the middle of this week. They've come back off. They too have some downside just because of profit taking, but our expectation is that the price of silver rises sharply over the next 7 months. And our expectation is that the price of silver possibly rises. Our projections, the silver price could rise roughly twice as much in percentage terms as we expect the gold price to rise. It's a smaller market. I wanted to finish with a political tidbit. In March of 2009, I was in Washington for a meeting on food security and agricultural commodities at the World Bank. It was March of 2009. Was the global financial crisis and the Great Recession were both going on. Barack Obama had been elected. He had been sworn in a peaceful transition of power in January of 2009. And the Republican Party kept calling him a communist and a socialist. Now, we had a client at the time who was a very large donor to the Republican Party. And while I was in Washington, I was talking to him, and I said, you guys realize that what Barack Obama is proposing with the Affordable Care Act and other policies, it's not socialism. And he said, yes, we know what socialism is, and we know he's not a socialist. I said, so why are you calling him that? And he said, well, in the early 30s, when the Nazis were trying to take power through the election process in Germany, their message consistently was you don't have to vote for the Nazi party, you can vote for the communists. And it worked for them. I thought of that recently because I keep hearing that Kamala Harris's policies are communists and that she's a communist and a socialist. And I mentioned it a few weeks ago. If you think this is socialism and communism, you've never been to a communist country. You've never studied them. You've never worked with communist governments. This is not communism. It wasn't in 2009, and it's not today. The little tidbit, this is a conscious effort to downgrade the intellectual content of U.S. elections and U.S. voters. On that happy note, take care of yourself, take care of people around you, have a good weekend, try to do something good for the world. And if you see a real communist, tell them, hey, we're not with you. Take care.